Welcome everyone to the trading week of April 13th through 17th. Now, if you guys are wondering why you're seeing this video rather than the CFO Swinger Watch report, let me quickly go over and summarize what I've written in the email. So I may or may not have carpal tunnel syndrome, as my nerves on both of my hands, especially the left hand, in the last 2 weeks have been giving me an excruciating amount of pain. So I do have a nerve test coming up to determine the potential damage or the extent of damage on my nerves, but in the meantime, my neurologist has recommended me to take a break this weekend from any strenuous activity that involves my fingers. So basically typing, right? So I will be back next week with the CFO Swinger Watch report. However, do not worry and do not fret. This specific video will cover everything I wanted to type and write about in the CFO Swinger Watch report. So let's get right into it. All right. So first off, the Strait of Hormuz is being a pain point for the economy and markets yet again. So after a 21-hour failed peace talks between Iran and Vice President J.D. Vance, Trump has essentially declared that the US will be putting up its own blockade in the Strait of Hormuz. So essentially, a blockade within a blockade, which doesn't make much sense, but it will definitely add more uncertainty and fear back into the markets. And one of those uncertainties and fears is that, well, it's leading to another major bottleneck that we are facing right now, and that is fertilizers. All right, the fertilizer industry is already being hit hard as it's one of the main products being affected by another bottleneck hitting the raw materials that make and produce fertilizers. And one of such raw materials is sulfur. And guess what country is starting to cause more problems with sulfur exports? Well, China. So let's take a quick look at this Bloomberg article, right? So it says China to ban sulfuric acid exports as war hits supply. So China has indicated it will halt exports of sulfuric acid from May, hitting metals and fertilizer industries already strained by raw material bottlenecks resulting from the Iran war. And it seems like the very first countries that will kind of become a main example for maybe possibly the entire world are Chile, the Democratic Republic of Congo, and Zambia. All right. And so this is a pretty big problem because, first of all, this year, global droughts are set to break records yet again. For example, in California here, guys, in the west coast of the US, we've just finished with the La Nina phase of a weather pattern, right? And now scientists and meteorologists are now looking at the El Nino, and they're looking to see if their current models are projecting stronger than average cycle for El Nino in the Pacific Ocean. And guess what? Chile, right to the west of Chile, the country of Chile, is the Pacific Ocean. And fertilizers are very much needed for agriculture, right? And so if we're going to see a stronger El Nino weather pattern, and if we're going to see these huge bottlenecks in fertilizers, right? We should be seeing a lot of damage in the agricultural industry, especially with crop failures and water shortages, right? And that's the reason why we need fertilizers to kind of, quote unquote, offset the consequences of that this global drought, right? And higher temperatures. And so this is kind of the reasons why fertilizer is becoming one of the main key points to be looking at, key industries to be looking at this year. And that's also the reason why I gave you guys kind of this very brief explanation as to why when I was looking at ticker symbol MOS, right? So this is a company that specializes in fertilizers, right? And I talked with one of you guys, right, one of the readers and the members here, that if I just bring up Discord here. There we go. All right. So I said, I think the most recent pullback here, right here, is what I'm talking about, was reflecting the short-term offset of fertilizer supply against demand. If they're not able to afford fertilizer, get fertilizer, they'll just stop producing the usual amount of crops, leading to a drop in demand. But once they need the fertilizer and demand picks up, which is again going to be in the summer, right? As people start to plant crops, right? To get ready for harvest near the fall time, okay? There won't be enough supply to meet that demand, specifically, again, the fertilizer supply. So again, this is a very elementary way of thinking about the current fertilizer situation, but I think that's probably why MOS dropped, right? But will continue to rise later into the year, especially as we get abnormal heat temps across the Midwest and central US. Again, this is basically a great summary as to what I've just talked about regarding, the La Nina and El Nino cycles, and also the countries like Chile that will be definitely affected by potentially a super cycle of the El Nino weather pattern, especially in the Pacific. So again, I think we need to be focusing on these patterns happening across different countries, because it could be a very stark example in the near-term future, especially in this country, in the US, because again, we're also facing potential droughts. So we're also seeing signs of potential drought, and we're going to be needing fertilizer, except if this continued supply strain from the uncertainty and fears and blockades within a blockade in SOH or Strait of Hormuz continues, it's not looking too good for us, right? Now, I am bringing this up specifically because here's the second point. This will definitely make food prices go up, because again, why do we need fertilizers? Because we use it to provide another need, which is food. It's a basic human necessity, not a want. And so if food prices skyrocket, energy prices will go up as well. And we already know that, right? We already know that 20% of the world's oil supply go through the SOH. And that's the reason why we've seen gas and oil prices skyrocketing higher. And I believe they've risen really, really quickly compared to the supply shocks that we saw in the 1970s, right? So it was kind of the same velocity as well. So if food prices go up, right, this is going to also affect inflation. And that is where we need to talk about in the next topic here, where we saw the inflation report coming out last week as well. And that was the CPI report, right? So the CPI report was definitely signaling something is very much wrong underneath the hood of the overall US economy, right? Now, let me kind of switch up or change what I've specifically talked about in the last year and a half or so. So I told you guys that we could possibly be seeing hyperinflation, but I'm going to scratch that and now give you guys even a more pessimistic view. And you guys already know I'm not really a pessimistic person. I'm more of an optimistic person. However, in the next possibly maximum 2 years, this may be the perspective that all of us have to take in. Because rather than seeing hyperinflation, I think we can be seeing a sustained high inflationary environment that's definitely here to stay for the rest of this year, 2026, and into mid next year. All right. And this is very interesting to think about, because as we've seen in the recent inflation report, we're seeing that the headline CPI is rising a lot more compared to the core CPI, right? And obviously, again, as a reminder, core CPI is the number that's excluding the volatile prices of food and energy, right? So when we have that larger difference between headline and core CPI, right, that's telling us that the longer term trend in inflation is showing potentially sustained high inflation, as I've stated before, right? So this is not good, right? So we're starting to see, again, more cracks within the economy. And again, I'm connecting all these different topics together because, again, everything is like a web. It's interconnected by a large web. So when one single domino falls, it's going to affect yet another domino. So when it starts to affect the basic needs of of humans, of us, right? I think it's showing signs that we're heading towards definitely 100% an economic recession around next year, or even, if I want to be even more pessimistic, guys, potentially a Great Depression. Right now, I personally don't think we're going to be seeing the likes of the Great Depression that we saw back in 1920s, right? But I think we're going to be seeing something that's going to be pretty bad for the modern era. All right, and that's the reason why I've also given you guys kind of that brief general time frame where I think we might be seeing kind of the ultimate fear, right? As we've already seen with consumer sentiment being at historic lows, right, about the overall economy. I think the overall bearish pessimism, maximum pessimism is what I should say, is most likely going to be reached around middle of this year. So maybe around late Q2 to early or mid Q3 of this year, as people really start to realize the extent of the damages that the agriculture industry is going to be facing as potential droughts continue, and the fact that the fertilizer industry is going to falter, right? And they're not going to be able to back up the already struggling agricultural industry. And as crops fail, and as we have less water to use, it's going to, again, have a domino effect across every other industry, and obviously a domino effect on actual prices, right? So that's most likely going to be the case for mid this year, right? And then the actual effects, right? The actual negative effects and implications of what we will be seeing around middle of this year is going to come into full effect by next year, all right? And it should last for at least until mid next year in 2027. All right, so that is my overall perspective and kind of a timeline and guideline for you guys to understand why I think this, right? Why I think this overall timeline makes sense to me, and something that should try to be making sense in your own heads. Okay, so with that being said, okay, let's go right back to SPY now. Okay, so currently. SPY and obviously the weekend futures, if you guys follow that, the only way that you guys can be looking at weekend futures is taking a look at IGN weekend markets. All right, just search it up on Google and you guys will be able to see it. But weekend markets have been gapping down, and technically, guys, on the SPY chart here, based on even just what I've just told you guys now, and just the current events like the Iran talks completely failing, and the fact that the U.S. Navy is looking to, and potentially even the military, providing a potentially effective blockade. Again, it's a blockade within a blockade, which is absolutely insane. But this could have really short-term bearish effects in the markets, as the markets are starting to realize what this could imply in the near and long-term future, right? Which is, again, what we just talked about. And so from a technical perspective, right, if we were to just completely take out all that noise, right, all that macro noise, we are definitely indeed due for a brief pullback, because, well, we've had a massive rally, right, from the lows of 2 weeks ago. Okay, we hit below 633, and then last Friday we ended up over 675.50. This is the next big major level that we were able to cross over. But based on how the weekend markets are acting, it seems like we're about to be consolidating below this daily 50 SMA that we've just broken out of, right? And again, I think from a technical perspective, we really do need a breather, right? So digesting a little bit of this massive rally to the upside is going to be very, very good and productive for any of the late bulls that are trying to get in this current new uptrend. All right, so short to midterm, we are in an uptrend, but longer term, we're still considered in a downtrend because we have yet to come back to the current highs and obviously the new all-time high price print as well. Okay, so for this week, all right, if you were to consolidate and basically digest the move that we saw for the last, almost 2 weeks here, okay, we would need to see the price at the very least. And as I've stated in the last few streams, especially last week, buyers absolutely have to hold this line in the sand level of 670. Okay, I do not want to see the price coming back down and retesting the daily 200 SMA again, because if you were to try to move away from this very, very long-term and major daily SMA, this 200 SMA, again, this yellow line here, we should not be retesting it yet again, right? We can retest like the 50 SMA, that's fine. That's exactly what we did last Thursday. But for a very large SMA like this, which again, everyone looks at, right? Like the institutions and hedge funds, right? We want to move away from it, right? We want to make sure that the daily 200 SMA continues to curl up higher, which again, I've already stated that this is most likely going to happen, right? And again, that has been happening, all right? So nice round of applause for myself, right? So with that being said, right, 670 is a critical line in the sand level for bulls to hold. Now, this week, if we do retest 670 at any point this week, right, this trading week, we have to pivot, right? We have to see dip buying coming in. And I truly believe that we will be seeing some dip buying coming in. And when futures markets open up, I expect a slight bounce. If the weekend markets continue to hold and, well, futures markets follow that open, right? So if that occurs, right, I'm going to be expecting SPY to at least hang around 670 to 672 or even maybe to even 674, right? That's still right underneath the daily 50 SMA, right? And the daily 50 SMA should provide a large area of supply for, at the very least, early this week, right? Maybe tomorrow and even into Tuesday. Now, if you were to talk about kind of the midterm perspective, right? Because like I've told you guys that as we head further into quarter two and into, early to mid quarter three, I gave you guys that macro pessimistic bearish perspective, right? Well, I still think even as pessimism and the overall market sentiment continues to stay bearish and pessimistic, right? The markets will most likely continue to move up higher because the markets like to do something that we all know, right? The markets like to move up and climb the wall of worry, right? You guys have heard that plenty of times from me and most likely from people in CNBC, right? The anchors in CNBC. And I think that's a very valid argument to make here, right? Even if we're still seeing heightened tension and conflict in the Middle East and in the Strait of Hormuz specifically, right? Yes, we do know, right? We do know what the implications are in the economy and the overall global economy if things aren't, calming down in the Middle East area, right? So, however, the markets are kind of always discounting for the future, right? So they're going to continue to move up and higher into the wall of worry, right? And I think that's the reason why I truly believe that around mid of this year, right, of quarter three or even just early quarter three, we could be seeing consistent new all-time highs, and most likely we can be seeing a revisit of the current all-time high price print of 697.84 and eventually towards the 700s, right? It seems implausible right now, but again, what did we do in the last week and a half or so, right? We've made a massive rally to the upside that, again, needs digestion. And I believe that this week will most definitely provide that digestion and provide more confidence for the people that have been staying on the sidelines, maybe the bulls that have been on the sidelines, and maybe they might want to come back in to dip buy specifically at the 670 hold number level. Okay, so for this week, make sure you guys are watching for the 670 to 675.50 area and this daily 50 SMA that it will most likely going to be currently be a major area of SMA resistance, at least the very first half of this trading week. Okay, and so with that being said, I want to go over one last macro look for the overall economy and just the overall global look. Okay, so as you guys know, as I've stated earlier, right, when it comes to crop failures and the overall agriculture industry, right, I have been seeing a lot of chatter, a lot of chatter amongst institutions and hedge funds about wheat. Okay, so wheat is one of the major crops that are actually very affected by oil prices, right, and especially overall energy prices. And we've been seeing just based off of this ticker alone, right? This is the WEAT Fund ETV, our ticker symbol WEAT. In the last month, so basically all of March, we've been seeing huge volume bars, right? I mean, the previous volume bars are nowhere compared to the volume bars that we saw that we have seen actually so far for the month of March and for the month of April so far as well. And this volume clearly tells me that the big boys are getting into this name, and they're most likely holding the same perspective and view that I have told you guys earlier in this video, right? And they're getting ready for a potential stratospheric rise in wheat prices, right? A major crop in the agricultural industry, right? And I believe the other one is like rice, right? Because of Asia, the Asian markets, right? However, wheat is essentially one of the major crops that are really kind of parallel with the oil industry, right? Specifically crude oil, right? And I guess the overall energy industry. So I will most definitely be looking at this one from a macro perspective. If you guys are looking for kind of tickers to figure out how the overall macro factors are affecting the overall economy and the markets, well, I think WEAT or WEAT, the WEAT Fund ETV, will definitely be something that you guys should be watching in your own watch list as we head into, again, that maximum pessimism and bearish sentiment into the middle of this year, again, around early Q3 or mid Q3. Okay, so please take a look at this, right? WEAT. All right, so with that being said, let's go over the two single tickers that I will be looking for a potential long this week. And that is, well, the first one is CRWV. So, as you guys see here, right, compared to the closing price of last Friday and to this, obviously, this is from last week. But, I think, yeah, it is from last week, I believe. This one, I just wanted to show you guys that these entry points were absolutely on point. That's the reason why I kept it here, right? And first of all, CRWV has been making some waves here, right? And last week, it was able to breach that triple-digit share price number that I've been waiting for on this name. And it was able to actually retest the very recently formed daily 200 SMA. And as expected, we saw a nice rejection at the daily 200 SMA and we closed slightly below it, but that's fine, right? That's exactly what we should be seeing when we test a major SMA on a higher time frame like the daily time frame chart. Now, I also want to go over the fact that I was pretty much on point with how the 21 SMA would act if prices were able to break over this $80 whole number level and eventually climb over to 85. And I've basically drawn it here. Obviously, the daily 21 SMA kind of deviated slightly below it, but again, pretty good here is what I was saying, right? Now, the reason why I want to bring this name back for this week is that tomorrow, okay, I'm most likely going to be expecting the markets to gap down, and most likely CRWV is going to be gapping down as well. Just makes sense, right? It's a tech name. It's in the it's a major player in the AI industry, which is again overall tech, right? It's in the tech sector, and CRWV will definitely be affected, and especially as a laggard, right? Even if it's a laggard, right? There has been a lot of great relative strength for the last, well, all of this year, right? It's just been moving sideways. And if you guys watched my CRWV and NBIS, Nebius or CoreWeave live stream where I kind of compared those two, I told you guys that CRWV has been really acting well, to be honest, right? Compared to all the other tech names, but it was still lagging behind its peer like NBIS, and I would expect CRWV to catch up anytime soon. And that's exactly what has been happening for all of last week. And just in last 2 trading days alone, we saw the volume skyrocketing here, right? The daily volume more than doubled, right? It's tripled over the average volume price, the average volume on the daily time frame. So that tells me that if we were to dip below this $100 level, I would expect to see a nice second entry point if you guys did not get in at 80 or 85, around $100, right? At the very least, when the price moves back over this triple digit share price number. Okay, so I'll keep it very, very simple for CRWV if you guys are looking to get in this name. So I really want to see a nice red to green move that eventually once bulls are fully in control, they can cross over the $100 level again, and that's when we can make an entry point once price crosses over 100.10. All right, so that is your entry point. Now, even if that is your entry point, you still have to realize that the daily 200 SMA is, well, going to be a very large area of supply. Yes, we saw a lot of volume, but depending on how we move, especially when we are expecting to see a red to green move back to the upside, this 200 SMA is definitely going to be a huge caveat for bulls, and definitely a great advantage for sellers to try to smack the price back down whenever the price decides to get close to this triple digit share price number. Okay, so again, even if it takes 2 days or 3 days or maybe the rest of this week to kind of consolidate tightly underneath this $100 level, I just want to see a nice red to green move that gives us that entry point and opportunity over $100 once more. All right, so for CRWV, that is what I will be looking at for this week. All right, now the second to last ticker that I'll be looking at for this week will be BROS. That's right, Dutch Bros, right? I have been talking about this for a long time. And when I say long time, okay, I have been talking about this since all the way back here, right? We've already had multiple tries and entries even back in the actual IPO days, right? That's how long it's been. This is since, yeah, look at that, November and October 2021, okay? And so this one has had a great move for in 2024 and into 2025. Now, since 2025 though, right, this one has been having a huge trouble continuing this massive upside trend. And in fact, for over a year, so if you take a look at the weekly time frame here, so let me kind of give you guys a very nice cleaner chart here, right? We have been seeing BROS consolidating for over a year, right? And as we've been consolidating, we've been seeing this massive macro descending trend line form. And just last week, we saw the price retesting this massive multi-month, right, trend line. And we saw another rejection yet again. However, if you were to focus on the actual anchor points that make up this macro trend line, right? We have the first anchor point right around here, or anchor area, right? And then the second one right around here, so around this entire area where we see a bunch of these wicks, right? These top wicks hitting this descending resistance trend line, this macro trend line. And then the third one, as you guys already have guessed already, right, was last week, right? So this is the third official major retest on this multi-month macro descending resistance trend line. And so I want to make sure that I'm looking at this name because this is one of the only consumer stocks, right? This is, I would say, Dutch Bros is pretty much a discretionary stock, right? This is one of those companies that consumers don't really need, right? This is not a need, right? To buy drinks at this company or in coffee, it's not a need, right? It's more of a want. However, based on what I've seen so far personally, Dutch Bros continues to see long lines and basically a growing fan base compared to large chains like Starbucks, right? And I've already stated before that people are starting to kind of fan out away from major chains like Starbucks, and they're trying to, well, experience new things. And Dutch Bros has become one of those places where people want to try new things, and they have been essentially growing stores, right, and a fan base. And just last year around this time, let me actually give you guys what I wrote about BROS, or ticker symbol Bros, right? And I specifically said, okay, let me see here, right? Yeah, it was in April of last year. I said Dutch Bros officially announced the numbers, saying that they have around $2 million in sales, right, per location. So they're really setting itself up as a economic moat against Starbucks in the specific industry and kind of group, right? And obviously it still has a lot of a long way to go, right? But just last year, right, they had plans to grow 160 locations in 1 year alone, right? And again, this company, just to remind you guys, they require little real estate, right? If you guys have been to a Dutch Bros location, they're usually in like these corner areas of a large building or a large little marketplace, right? And they also are able to have even a drive-through, right? Even if the actual place is very small. And so it's very, very efficient when you're thinking about the real estate space that they take up, right? So they don't take up a lot of space. And I would assume there is less input costs compared to like, Starbucks, where they have these pretty average sized stores, right? But they also do take up a lot of costs, right? Eat up a lot of costs, right? Or a lot of the revenue per location. So revenue and sales as well. So, as demand continues and as the sales and revenue per location continues to rise, right, which again, the overall company is expecting to see that. I think as their competitors continue to close locations like Starbucks, if you guys haven't realized that, but Starbucks has initiated a program to continue to close out stores and locations that aren't doing too well or doesn't make sense anymore to have those locations at those specific cities or spots. Bros continues to grow and grow and grow. So based on that fundamental perspective alone, I think Dutch Bros, even if we do have a pretty much of a negative perspective on the overall consumer and the economy, I think Dutch Bros still should be given a chance for a potential rise up higher from a technical perspective and from this descending resistance trend line that we are looking at right now. Okay, so if you go back down to the daily time frame now, okay, this one has been really just consolidating quite well from mid last week, right? That big jump, right, on Wednesday. So for me, for a potential entry point, if we do decide to continue to consolidate, and if we try to maybe, just maybe, try to close in this gap here, I would expect to see a nice bounce around $54. So I've written it right here, okay? All right. So a long bounce at 54.10. That will be our more riskier but earlier entry points if and only if we continue to see some sideways consolidation, which I expect to see occur this trading week. And most likely, this is going to be a watch list name, and we're not going to be going to this name anytime soon this week. Maybe by Thursday or Friday, who knows, right? But again, I expect one to consolidate for a long time. But if you just want a simple breakout, confirmed entry point, okay, a nice confirmation entry point to the long side, over 58.10 will be that specific level, okay? So that will also cover the fact that the price will be over this macro multi-month descending resistance trend line and over the daily 200 SMA, which is currently continuously curling down and closed at 58.33. So if I were to presume that Dutch Bros will be gapping down a little bit slightly, right, as it's going to be affected by the overall market action, which is going to be a gap down as well at this point, I would expect the daily 200 SMA somewhere closer to the whole number level of $58. And as the price continues to consolidate, this one will continue to curl down and eventually flatten out right below $58 and right around this descending resistance trend line. And if all goes well, we'll be seeing the price breaking over again this nice descending trend line and over the $58 level and over the daily 200 SMA. All right, so that is it for the two specific tickers that I'll be looking out for this trading week. Now, as an extra bonus, okay, I am still personally looking at LITE for a third potential short. Okay, yes, it's absolutely insane that this stock is almost hitting $1,000, but hey, you know what? Maybe $1,000 is going to be the next short entry point. Again, it sounds like I'm continuously moving my entry points for short. And that's true. And that's exactly what you should be doing when you're trying to find a good tactical short to the downside, especially if the overall analysis is that we're going to be seeing a potential mountain peak forming, right? I've explained this multiple times, what I want to see, this mountain peak. And that's exactly where a very good short trade will be born, right? And so you have to go with the technicals. And again, more of the textbook technicals are really just thrown out the window, and we just have to follow the price action, right? And the whole number levels will matter the most, okay? And luckily last week, we ended up closing below $900. However, with such relative strength that the overall, the optics group and memory chips are getting these days, all right? In the last, year or so, tickers like LITE will most likely continue to have some great relative strength even if markets show weakness. So I think LIT, I will definitely continue to watch for a short, for a third short, which will give me a total of 6 trades that I've taken already on this one. So I think LIT, I will definitely continue to hawk for probably the rest of this year, especially into the mid of this year. If this one continues to go up higher and eventually potentially form a mountain peak around maybe above $1,000 per share, but who knows, right? Who knows? We have to take this name day by day, week by week, and again, price action only, not just off of technicals, because again, technicals are basically thrown out the window when we have such a large parabolic move to the upside. All right, so again, as annoying as it is, it may be, because I keep on mentioning this in the CFO Discord, but again, I do have a personal vendetta against this, because again, the second short that I took on this name was very successful, and I do want another third short that could potentially capture that mountain peak or that initial bubble burst, right? I want to be in that trade, right? So that's the reason why I'm going to be trailing and hawking this name as it continues to rise up higher and higher and higher. All right. So with that being said, that is it for this video. If you want to watch any of the other parts of the video, just go around and click on the chapters of this video, which you guys should be able to see at the scroll button down below of this video, right? I will provide the chapters there. So again, it's a very long video, but if you really want to go over and kind of get a good summary again before the markets open tomorrow, make sure you guys click through the chapters and watch each section again. All right, so thank you so much for sitting with me here and watching through this very long video, and I will see you guys tomorrow morning in the CFO Discord channel. Thank you so much.